Good day, fellow investors. I am currently researching every stock traded on the Italian stock exchange, and on the Italian stock exchange, you also have these big names that are traded: Google, Apple, Amazon, and all the other big names. And as they are traded there, I also check them. Always good to check, recheck, and see what's going on. And as I do that research, I came to the conclusion that Google's business is way better than Amazon's. And therefore, at the same, let's say, valuation stock price, Google should be a much better investment. So both stocks have been hit as the pandemic eases off, as the pandemic spending balloon slows down a little bit. Expectations are a little bit lower. The market cap 1 trillion for Amazon, 1.2 trillion for Google, but the key is P ratio 21. Of course, that will go higher as earnings are a little bit lower. No P ratio for Amazon as they are just investing. But if we look over the last 5 years, Google returned 76%. Amazon, despite being a great business, returned 37%. And I'm arguing that over the next 5 years, the situation at equal prices, the stocks are already priced the same, will be again much better for Alphabet stock. This is because of the nature of the business, the profitability, and the scalability of it. If we look at Google, if we look at net profit margin, it has been around 20% over time. Net profit margin. If we look at Amazon, at best they reached 5 to 7%. I think Rivian adjustments here are included. So at best they reach 5%. So they are a very low margin business. And even now, they are not making any profits compared to the constant profits, constantly positive net margins that Google is making. And recently, Charlie Munger had his conference and he discussed Alibaba, but he said how it was a big mistake. I never stopped to think Alibaba was still a retailer. It's going to be a competitive business, he said. Retailer, competitive business, everyone is after you, and that's what we are seeing with Amazon too. If I look at these profit margins, they are good at some point, but then again, they have to constantly invest, spend a lot of money to keep their position in the market. And something especially important here is the following. Let's say you buy my book on Amazon. What does Amazon have to do there? They have to package it, sort it out, ship it to your position, to your place of living. And then if somebody buys another book, again, shipping, packaging, hiring more people. So the more they sell, the more they have to invest to fulfill on that promise of same-day delivery in Minnesota, middle of nowhere, who knows. That's the complexity of the retail business. It has always been complex for Amazon, but Jeff Bezos did pull out a miracle out of his hat. But there is constant investment needed, and given that is a retailer in a highly competitive environment, that is likely to be the case for a long term. An investing trick that one should do when it comes to Amazon is when the profit margins are above 5%, sell. It might be a buy when profit margins are lower, and then when those go higher, because Wall Street will always look at this temporary and extrapolate into eternity. So that might be a trick, but when the horse is behaving well, sell it. Compared to Google, if you do a search here and you do another search and you do another search, it doesn't cost Google much more to deliver on that promise. I usually would get Amazon or some advertisements here. I don't get them now, so there is obviously, of course, I live in Slovenia, there is obviously less spending, so that will hit Google too. But long-term profitability and profits go for the better businesses. What always Warren Buffett said, he said Google was a mistake, he didn't invest. Amazon, he said that he doesn't invest in miracles, and he calls that a miracle. So at the same stock price, similar market cap, just look at what those companies are producing. 20, 12, 30, 34, 40, 76, 59 billion in net profits, all used in buybacks, thus return to shareholders. Practically no net profits here. So 1 year, but then again to zero. Everything is reinvested to fulfill on that promise, to build that ecosystem. And while Amazon builds the ecosystem, Google gets the clicks and makes the money. As investors, we are here for money. So kudos to Jeff Bezos, but it's very likely that this might continue. Of course, I also consider Google a little bit overvalued. Wait for buying, but I'm just saying that it might be better buy down the road. Thanks for watching. I'll see you in the next video.